Mukesh Ambani-led Reliance Industries Limited, RIL, on Friday posted a marginal 0.56% year-on-year YOY growth in its consolidated net profit at 18,645 crore rupees in the third quarter. The profit is attributable to shareholders of the company. Revenue from operations in the same period rose 11% year-over-year to 2.69 lakh crore rupees. On a sequential basis, the profit increased 3% from 18,165 crore rupees reported in the September quarter. Revenues jumped 4% quarter-on-quarter. The oil-to-telecom conglomerate reported an EBITDA of 50,932 crore rupees, which is up 6% year-over-year, led by strong operating performance in Jio and O2C businesses. Reliance is entering a new phase of value creation with its initiatives in the AI and new energy domains. I am confident that Reliance will play a pioneering role in the evolution of these epoch-defining technologies, providing sustainable solutions at scale for India and the world, said Mukesh Ambani, Chairman and MD, Reliance Industries. During the quarter, depreciation increased by 11% year-over-year to 14,622 crore. Finance costs rose 7% year-over-year to 6,613 crore, largely due to operationalization of 5G spectrum assets. Tax expenses, meanwhile, came in higher by 10% year-over-year at 7,530 crore. Also read, Reliance Jio Q3 results. Profit jumps 11% year-over-year to 7,629 crore rupees. ARPU rises to 213.7. Capital expenditure for the quarter ended December stood at 33,826 crore, $3.8 billion, driven by investments in ongoing growth projects in O2C and new energy businesses, and also continued capital outlay towards strengthening and expansion of the Jio and retail network and infrastructure. O2C segment. The company's mainstay oil-to-chemicals business reported 8% increase in revenues at 1.69 lakh crore rupees. EBITDA for the segment rose 15% year-over-year to 16,507 crore rupees, due to sharp increase in transportation fuel cracks and higher sulfur realization, partially offset by weakness in downstream chemical margins and higher feedstock freight rates. Favorable ethane cracking economics and domestic market placements continued to support profitability, the company said. Fuel retailing operations through Jio BP expanded its network by 14% year-over-year to 2,125 outlets, driving volume growth of 24.7% for HSD and 20.8% for MS. The robust growth in O2C business was led by significantly higher fuel margins with favorable demand-supply dynamics, along with operational flexibility. I'm happy to highlight the strong growth in our fuel retailing business, with continuing expansion of the Jio BP network. Upstream segment. EBITDA was impacted by lower volumes and prices, said Ambani. The company said agile crude sourcing helped sustain throughput despite procurement challenges during the quarter. The total throughput rose 200 basis points year-over-year to 20.6 million metric tons. Reliance Jio. The company's digital and telecom venture, Reliance Jio, posted a 11% growth in its net profit at 7,629 crore rupees in the third quarter. Revenues increased 13% year-over-year to 43,683 crore rupees, which was driven by robust subscriber addition, ARPU growth, and scale-up of digital services. EBITDA for the segment jumped 16% year-over-year to 19,303 crore rupees, while margins improved 170 basis points. ARPU, average revenue per user per month, for the quarter increased 213.7 with higher customer engagement, partly offset by promotional offers for unlimited 5G and fixed broadband services. The company's customer base increased to 515 million at the end of December quarter. Total 5G subscriber base reached 253 million as of December 2025. 5G now accounts for 53% of total wireless traffic, driven by consistent increase in customer engagement. Jio's subscriber base, deep customer insights, and pan-India distribution network will empower Reliance Intelligence to achieve its aim to make India not just AI-enabled, but AI-empowered, where every citizen and enterprise can harness AI tools to create, innovate, and grow. This will drive sustained value creation for all stakeholders in the coming years, said Akash Ambani, chairman of Reliance Jio. Reliance Retail. Reliance Retail reported a steady performance in the December quarter, with growth led by grocery, digital commerce, and consumer electronics, even as margins moderated on a year-on-year basis. Profit after tax for the quarter stood at 3,551 crore rupees, marking a 3% increase year-over-year. Quarterly gross revenue came in at 97,605 crore rupees, up 8% year-over-year, supported by festive demand, network expansion, and rising digital adoption. EBITDA for the quarter stood at 6,915 crore rupees, reflecting a 1% year-over-year increase, while EBITDA from operations rose 2% year-over-year to 6,770 crore rupees. The EBITDA margin declined to 8% compared with 8.6% a year ago, a contraction of 60 basis points, largely due to operating leverage normalization and cost pressures following rapid scale-up across formats.
During the quarter, Reliance Retail crossed a key operating milestone, with the number of transactions exceeding 500 million. The company added 431 new stores, taking the total store count to 19,979, with 78.1 million square feet of area under operation. The registered customer base expanded to 378 million, reinforcing its position as one of the largest consumer platforms in the country. The grocery business delivered consistent growth, supported by festive demand and higher wallet share. Core categories continued to grow strongly, with dairy, frozen, and bakery up 23% year-over-year, staples rising 19%, and packaged foods growing 15%. Festive-led gifting drove sharp traction in discretionary food items, with namkeen sales up 40%, chocolates up 32%, sweets up 10%, and dry fruits up 13%. The metro wholesale format maintained steady momentum, aided by higher footfalls and successful execution of the Metro Wholesale Utsav campaign. Our retail business also had an eventful quarter, strengthening its portfolio with the onboarding of fresh new brands and product ranges. The demerger of consumer products business came into effect this quarter. With a broad and diverse product basket ranging from classic Indian brands to new age labels, the consumer products vertical is progressing on its accelerated growth trajectory with a focused organizational structure, said Ambani.